Hey traders, good morning. Hope you're doing well today. Good morning to Kay and Stell.
Good morning, Ryan. Good morning, everybody.
How are you doing?
Yeah, very well, thank you.
Good stuff, good stuff. Stell, are you there? Are you there, Sydney? No, not yet.
He's trying to get off his boat, you know.
Yeah, tide must be in. Have to swim a bit further. Right, while Stell sorts himself out, we shall crack on with the show. Obviously, bit of the big news in markets is the break of parity finally. The will it, won't it question has potentially been answered. We'll look at that in a moment. You can see that on your screen there. We're going to start off, as we often do, with some of the China headlines. Not really a big amount out. I'm seeing yet again more stories about the drought situation in China. This one just popped up on my feed not so long ago. One of the largest lakes, or its largest lakes, really dry. It's at some 25% of its usual size, and workers are having to scramble around to set irrigation ditches to water the crops, and that's one of the big rice producing areas. So China really under the cosh there, which may or may not have an impact on the geopolitical situation elsewhere, because if China is struggling, they're going to want to import more food supplies, particularly obviously with the Ukraine situation and things like grain, a big question mark there over getting grain and other agricultural products out of the Ukraine. Could China have a say in that, in getting those agricultural products flowing a bit more easier than they are now? You know, when you get into these sort of situations, everyone's going to be looking at getting food on the table for their citizens, and if they can't produce it, they're going to want to get it elsewhere. Probably a strenuous link, however you want to look at it, I'm making there. I wouldn't bet the farm on it, but you can never rule out these types of situations. You know, China, if China could become a self-producing nation, you know, not reliant on exports, on imports, that gives them a greater say in being able to mess around on the geopolitical stage. But if they become desperate and need to import from elsewhere, it can mean that relations tend to go a bit more positive when talking to other countries. But as I say, not saying you put your hat on, but keep an eye on that situation anyway. What else we got from China overnight of note was one of the, let's call them state affiliated or state-run news agencies, the Security Times, saying that the PBOC may cut the RRR rate sometime this year. Now, if you've been following the show for a while, or indeed in the chat room, you'll know that I've been speaking about all these MPR cuts, LPR cuts, all these smaller loan rate cuts that we've been seeing. But the big one is really the RRR. It's effectively, it's not the interest rate per se, but the reserve requirement ratio is the amount, is the percentage of cash that banks have to hold on the books in reserve. And if they cut the rate, the ratio of how much banks can hold, it means they can lend more out, put more into lending out to the economy. So it's effectively their form of big easing in terms of that sense, rather than a pure interest rate cut. So the fact that this is an insider state affiliated news agency coming out with this could be a signal that they're going to be doing that at some point in the next few months, next couple of months. So one to keep an eye on there. The more it's talked about, obviously, the more it's likely to be priced, and so less of an effect when it does actually happen, if it happens. But if they suddenly pull it out the bag tomorrow, for example, that will be a bit more of a shock to the market than knowing for several weeks that one is potentially coming. So keep an eye on that, because that's going to, obviously, as I say, get the market expecting to see one of those cuts coming along the way. As you can expect, for the yuan itself, that's continuing to climb. I did look at the onshore. I'll get that up quickly, because that's the one that obviously the PBOC and China effectively look at. The FIX was set at 85.23 today, so I still think the fixes are catching up to the price moves. What you need to watch in terms of when they're not doing that, or when the PBOC are signalling that they're happy to let the rate continue, is if we see the price dip but the fixes are still remain higher. Then it can be a situation where the fixes will lead the price rather than the other way round. For CNH, obviously that's climbing up too. It's breaking through all the levels that we had through the 61.8 fib of the move from 2020 to the 2022 lows, 85.62. We've moved up through there, and we're going to be looking potentially at the 7 mark coming up there. But we'll talk about the price in more detail. I'll let Kay talk about the price in more detail because he's been riding that horse very nicely on the way up. So I'll let him do the analysis a bit more after we've done through the other news items. Just from the US, we had just, I wouldn't call it a big headline, but Ford are cutting 3,000 jobs globally. Not a huge amount of jobs in the main, but this is a big company. I haven't kept a close eye on the headlines for job cuts, but I'll keep an eye on the Challenger Grey report when it comes out in the next NFP week. If we're going to see jobs coming down, if we're going to see things like the NFP going into reverse or posting poor numbers, we need to keep an eye on these job cut headlines coming out. So Ford, one of the biggies with a 3K global cut. Keep an eye on that. If we start seeing huge wholesale job cuts, then we're going to potentially start thinking about a turn in the NFP, as I say. Now Tesla, I think, already previously announced last month some cuts as well. So I have heard of job cuts coming in the auto industry. Obviously, problem supply. So natural progression for that is that the longer those problems carry on, the more likely job cuts are likely, and that you can pretty much paint across a lot of the sectors. It's something we've been looking at. I've been looking at in this supply chain issue. The longer it lasts, the more demand is likely to drop off, because if people can't get their goods that they've ordered 6 months ago, they're not going to continue ordering more. Then we see production falling, and then it passes all the way down the line. And at the end of the day, if firms can't produce the goods that the customers have paid for, one of the first places they go to cut costs is jobs. So it's one of these long-running themes that we keep an eye on. We've got the PMI today from the US, so keep an eye on that as well. We've had the PMIs in Europe this morning. Well, starting off in Asia, we'll look at Australia. Manufacturing, a small drop there, but services went into contraction on that one. Japan as well came in as expected, but confirming again a small drop in manufacturing on their PMI. Again, services there going into the contraction as well. Also, they can see Bank of Japan core CPI measure coming in year on year at 1.8%. So massive beat of the forecast, 1.5 and 2 pips up on last month. So again, surprisingly, perhaps we've not seen much reaction in the yen on that. I think the market got its kick in the arse for trying to call out the Bank of Japan in the previous weeks. So perhaps they're not too willing to come in and push the buttons again right now. But as you can see, Bank of Japan's measure there, CPI is creeping higher, particularly in the core numbers. So the longer that goes, the higher that goes, the more they're going to face a task of trying to brush it off as being temporary. So for the rest of the PMIs, France was as well. Services was down, manufacturing further into contraction. Over to Germany, it was a bit of a better number for manufacturing, but the composite dips there. Services dipped back further into contraction also. The pan Eurozone number, again, all looking a bit soft. UK came out as well. Bit of a dump for manufacturing there, big miss, down to 46 from 51 expected and 52 prior, so heavily into contraction there. Services, though, countered that a bit by beating expectations at 52.5, only a small pip loss on last month. Services obviously the biggest sector for the UK, manufacturing some 15 to 18% of GDP, so not a huge amount compared to services. Overall, looking at the data, perhaps not as bad as some might have been expecting. Certainly regarding the price moves we've seen in the euro, it's stabilised. The data hasn't given any real secondary input into the downside for the euro in particular, but we'll look at that in a moment. A couple of other headlines out of Russia. We're talking about this Zaporizhzhia nuclear plant. The Russian government, the Duma or Parliament, is going to hold a meeting on that the 25th. But also before then, they've requested a UN Security Council meeting to discuss the situation, and that was out yesterday, calling for a meeting today. I haven't seen any latest headlines on that as to whether that's been granted and whether they're going to have a meeting, but it looks like we're going to get some talks on that situation there. That's all I've got from the headlines. Kay, Stel, I don't know if there's anything you've picked up you wanna share right now?
Yeah, there's just two little lines on the oil. As oils were coming down quite heavily yesterday. We had a couple of we had this one headline saying that, or article saying that the strategic petroleum reserves are falling to the lowest level since January 1985. And then we had the Saudi energy minister coming out saying that OPEC Plus can cut the output to address the oil slope. It's a bit, well, I mean, a little surprising. But then he said something about saying that the oil futures market has fallen into a self-perpetuating vicious circle of very thin liquidity and extreme volatility. But he comes out with some comments, or comments like this: when oils are coming off, when the rest of the world would possibly find a bit of breathing space, he then goes on to say, "Nah, not really. You're going to pay more again." So oils are jumping on the back of it, which underpinned some of the oil currencies again overnight and early this morning. That is, I haven't seen much else coming out, to be honest, news-wise or headline-wise, that is worth noting or market moving.
Yeah, cheers, mate. Yeah, I saw a couple of bits on the Saudi thing. I was out for most of yesterday afternoon, unfortunately, so I'm not wholly up to speed. I know Gavin's commented on there. I think one of the things they were moaning about was investment into the sector. You know, but that's the situation you're in. If they want oil prices higher, then they're in the driving seat for it. So, you know, it would be, like you say, it's a bit of a let off for some countries, big heavy importers, you know, particularly countries like Japan. If oil prices drop, then that's a bit better for inflation numbers. But conversely, you've always got to match that off with what happens in the currency as well, because obviously stuff's paid for in dollars. So as the rate moves, you can get a big move in oil, but if the rate moves negatively against you for those imports, then the price really doesn't change, irrespective of what level oil is at. But definitely one to keep an eye on there. A lot of the market calling for lower oil, and the Saudis may have just drawn a line underneath it. So yeah, keep an eye on the upside there. And fairly big area, just quickly on the techs, 93s, 94s area. A lot of people been looking at for a while. It stretches back quite a way, if I recall. So at least on the techs, that sort of area there could be a bit of a pivot point. If we can't get above there, maybe it needs a bit more extra juice from the Saudis to push it back up. But keep an eye on that. From a tech standpoint. Right, well, let's get stuck into the prices. Obviously, the big news of the last few weeks really is what's going to happen at parity, and we finally got a break underneath. I was jobbing around this one, or trying to job around this one yesterday. I had a little go from the long side, but I just wasn't liking the bounces yesterday, and I got out a bit of my position for a small loss, and then I turned it short yesterday afternoon, because it just felt to me, you know, call it experience, call it gut feeling, wherever you want to call it, you know, these bounces off the where are we up here? These bounces were just really, really weak. And when I see that so close to a big level, it's looking like it's going to break. We couldn't really get through. We had a little attempt, probably a little stop run down to that first break lows. Then it stabilized a bit, but it was just indecision. In the end, I thought, right, it's not bouncing. I'm going to get into a short. And thus I did. Got out some of it, 99.60s, 99.27s, just around that trend line that I had on my chart from the weeklies. It's been a bit flip-floppy around there. We had a push down early this morning, down to the K's big 99. That held on the button, pretty much. But what we can't do right now, which is significant for me, let's see if I can get it there. No, let's go a bit wider. Is we can't get above this prior low point. That to me was my first resistance area after we had this move down underneath it. We can't get above there. So from there, really, my levels that I'm seeing on there, and I'll just take it back to the short term. So 99.50s is the area there, the first mark. Then just around here, I've not marked it with a line on the chart. It's just something I'll keep an eye on, 75.80, just because that's when we had the break point. That's where the resistance came in soon after that proper break. Then when we get into sort of 99, 90, 95, 00, that's going to be the next key point. Above there, then it's going to be this area up here, the 50s to 70s as the main points. Maybe we'll see some traffic around here in the 20s. For the downside, I'll say I'll let Kay, well, Kay's been banging on about this for quite some time, so you should all know the levels by now. For me, mainly looking back to a weekly chart, and I'm just looking around this area down here from 2002, a bit of a traffic zone when we had a big breakdown and then we came back up to it. So you need to watch your levels there. The bottom of that area comes in around 96, 80s, or sort of the top 96s to low 97s. I'll come in a bit closer for you there. Just I've got a weekly low in there around 98, 50, 60, 80 really is what I'm looking at. So if we do maintain this move down, if we do break down below 99, then I'm looking at that area around there, 98, 59 to 80 potentially as a stalling point. 96, 95, call it 97 as the next main level down below. We've also got, as I say, this weekly trend line coming in from 2015, 2016. We have been mooching around it. You could call it a potential, you know, false break under for the moment, but the price is doing a little bit of a shimmy shammy around there. If we do get a move under 99, I'll be watching that area to become secondary resistance then after 99, the big figure. So that's what I'm looking at. Yeah, okay, do you want to just grab the Euro chart quickly just to go over your bit, and then I'll take it back again?
Yeah, sure, mate. Yeah.
I know you've got more levels on the downside you've been showing.
Yeah, but do you want me to how should I say? Do you want me to run through all my stuff first and then you take it back, or just the Euro?
I'll tell you what, do a couple. We'll break it up, do a couple, and then I'll take it back, and then I'll hand it back to you again.
All right.
Change. If
There we
that's
go.
you, don't distract you too much.
This is what I was talking about for ages. The 99, the figure in the euro dollar. If it gets below there, I don't know. Some of my charts are showing decent lines. The other ones are not showing everything. I will need to check this out. This is the September 2022 lows, 96, and I'm not a wizard in harmonics or wave counts and stuff. Really far from. But models or patterns are showing a potential of a move down into this 97, 96, and 97, 96. There should be an interesting zone if ever we get there. But I'm looking at a couple of things right now. Of course, the 99, the figure zone, but we also have to take into account time. And we are going into Jackson Hole. We do have data out which could influence the dollar, whether it's up or down. As we can see, the US yields have been pulling higher and higher. But on the other hand, the Europeans as well, because they are going to continue to struggle with bad inflation. So I think into Jackson Hole, we may get a break below, but whether it be a decisive one remains the question, in my opinion. I'm not sure if it's going to be a viable break below 99, the figure just now. Just to repeat what I said on F.A.C.E before, I don't think Powell will really be decisive on in Jackson Hole. He will give us something about the path hasn't changed, or but there may be like he's always walking a fine line, not to trying not to disrupt markets. So we might be like getting we're on the same path, but we are data dependent. Where it looks as if this is now the step for the central banks, because we've seen several central banks coming out with their decisions over the past days or weeks. And all of them seem now to adapt another leaf out of the global central bank communications book, which is data dependence. So we may get a break here, but then I wouldn't hang my hat to it right into Jackson Hole. But I'm still very pessimistic on the euro. So for now, I prefer to express it through crosses, which I will show a little later on. You want to do your stuff now, Ryan?
Yeah, no problem, mate. I can take that back.
Okay.
I can take that back. Here we go. Yeah, it's just I'm in two minds. Just intraday trading this. I set a overnight TP, partial TP on my short. From 01s and 97s at 99.05, purely respecting the possible support we saw into 99 as K's been flagging up. So I got off of that one. I was in half a mind to perhaps flip into a long, because the level could be quite solid, as it's proved to be. But I'm judging whether the break of parity is going to be bigger for the longer term than the holding of support at 99. I really think that if we get a test up here and hold under here, we're heading much lower. We could be heading to the mid 90s perhaps. I really feel that this could be potentially, I'm not going to say it's definitely going to be, could be a potential, really strong break. But on the other side, we've got to think that we've come a hell of a long way, in a short space of time, but just to check the trend overall, since last year, it's been down and down and down and down and down, and nothing is going to fall forever. The fact that the data wasn't horrendous today is probably helping it not to break 99. But as I say, my conundrum now is whether the break of parity is more important than holding 99, and that's what I feel at the moment. The US PMI could be a bit of a trigger if we get some solid numbers there from the S&P Global PMI later on. That could cement a move under 99 because it will show that the US is still chugging along nicely. That'll keep the Fed on its path. The market might twist expectations a bit more for something a bit more bullish or hawkish from Powell. on Friday. As we said yesterday, it's these sort of things, these bits of data, headlines, whatever, that will get the market changing its expectations or running or firming up its expectations all through this week. So I expect to see quite a bit of chop around the data when you're matching Europe off against the US or just US as a whole. So let's look at dollar CAD. Mike, want to have a quick look at dollar CAD. Yeah, a bit of a kicker this one because I was long Friday and I closed it up for a handful of pips, and it's obviously with the moves in the dollar yesterday, it's ripped higher. Still within this 29.31 zone that I've had on my chart forever, and I've been speaking to you guys about it forever. We've got into it. We'd like to hold it. We've got above this minor zone around about the 29.50 60s, just sort of an intermediary zone there where the price tends to mess around. As you can see there, when we first came up, it was resistance, then we broke, couldn't get through the whole of it, then it became resistance again, support. You get the picture. So not necessarily an area I'd actually trade, but it's one of those watch points that sometimes the price just runs into a bit of trouble there. So if you were long from 129, then you look at these sort of areas and think, right, what do I do here? Is it going to break? Is it not going to break? Do I take some off the table? It's one of those bus stops on the journey, if you like. So here we are rocking up to in the 130s. We couldn't quite get up to the 130.80, which has been again another one of those levels. We had several touches of it when we've moved up here. It's been quite a significant area. Then we got the false break above, couldn't hold it back below. One of these levels where it's got history, it's got strong history, so you factor it in when you're looking at it again. I wouldn't be surprised if we hit that and find resistance there again. But conversely, we could just carve through it. But it does become one of those areas you look at again. If you're long, if you're looking for where the price might run into trouble, that's where you look. 131 again, being the big figure, is somewhere to look at. If we do get a breakout of this zone, I guess it's a bit like the euro and parity. We've had a breakup before, it failed, we came back down. Will this secondary move have legs and kick it right out, and maybe we'll get above this channel and hold it this time? Again, like the euro, and I was saying yesterday, that may be something you might want to wait for a confirmation move. So get above this line, look for confirmation that it's holding. The prior time it didn't. There was no confirmation at all, and we came all the way back down again. This time it might be different. We're attacking it fairly quickly after the last attempt. Look for a confirmation breaks. Look about getting above 30.80. If we start to see 30.80 as support, that gives you some conviction that we're going to carry on heading higher. So that's my view on dollar CAD. If you've got any questions on this or any of the pairs that we're looking at, or something that you're looking at and we're not, please throw it up in the comments and we can have a look at it there. But Mike, obviously, yeah, as you say, oil is a big feature there, which is probably why we've just come off these highs with oil moving higher, but we've not come off significantly. We haven't seen CAD gain significantly, even as oil's bounced. So, what's the main driver? Is it the general dollar move, or is it oil? It looks like the dollar move is more winning out than the oil at the moment. But as we know, that correlation can strengthen and weaken at any particular time. Euro sterling, I'll have a quick look at, and I know Kay's been tinkering around in this one. For me, it's still not going anywhere. Still indecisive in this 84, 85 area. It's dragging on. We do get the moves out as we mentioned, but you can see this is just been a big congestion zone in here. If we get moves out, they can be significant either side, but we seem to keep coming back in here. So from this one, some decent moves, of course. We had a little move above 85, tried to hold in the zone there, couldn't. Now we're back down. Is this zone going to become support again? I'm still loath to try it. I really would rather be long, trying to get in long down here, low 83s, down in the 82s. But I think it's going to need something significant to get us down there. Kay, what's your view on this one? I know you were jobbing it around yesterday as well.
I tried it short yesterday, and then I got a bit trigger happy on the let me kill the squawk because they have like a fire alarm going off there. And I got a bit trigger happy when the manufacturing PMI came out. So I was short. I was trying to play the failure of 85 and then back through that trend line that you have there in the mid 84s. And I was trying in a short, and then this morning, as I said, I got a bit trigger happy and covered it, and yet the services PMI seemed to compensate more than the weakness of the manufacturing, because the manufacturing represent less than services in the UK economy. So in my opinion, we could indeed get back down to somewhere around your 84, the figure zone. I wouldn't be looking for too much either, because for different reasons. If you look at the UK and the European state of affairs, they are both rather weak right now. Because I saw that British Airways is planning to cancel another 10,000 flights or so come winter time or in the autumn, and there's not a lot of help for the sterling in the current market either. Although, as I said, technically it looks as if we could be in for a bit of disappointment. Go back down to 84, the figure to start with. Why not even that 83.70 zone? But yeah, for the time being, I'm not in it. I may try to sell the rally again if we get anywhere close to that yellow trend line. But it's all intraday stuff, right? I don't have any like big views on the euro sterling right here and now. It will be for shorter term, please.
Yeah, no problem. Right, let's have a quick look at cable because it's looking quite shitty. We had obviously the big break here was the 120, and it's pretty much headed down ever since. Now knocking out the prior lows. I'm not really playing cable a lot. I had a little scalp try Friday 118. Took a few pips out of that, and again gave it up late Friday. Didn't want to hold it over the weekend for a few pips there as well. But I'm still not looking really to play anything. It's still all really, if you're matching the UK against the US, the US is coming out on top. We have potential to head back to at least these, down in the 114s, that low down there, and that could be quite significant. But I mean, even so, when the day looks darkest for the pound, that's when you have to be careful, because that's when you can start to see a bit of resilience coming in. And even thinking back to matching off the UK against the Eurozone, a slowdown in Europe will be much bigger than a slowdown in the UK, primarily because of the 19 countries intertwined along with the rest of the Euro area. And the UK can tend to not go as bad as in Europe sometimes. When a lot in the market and economists and everyone is predicting this is it, this is the doom and gloom time and the fiery abyss, that's when you can start to see the UK not doing as bad as what people are expecting or making out. I'm not saying it's going to be roses around the corner and boom time's coming, but we could see just different speeds between the UK and the Eurozone. It might mean that we see the Eurozone data cratering faster than we see in the UK. And if that's the case, then that's going to be a bearish for Euro sterling, particularly because the pound will likely be more supported. But it could mean also that we see cable finally finding some support down here. For me at the moment, I couldn't tell you where the real support is anywhere that I would lean on. As I say, I'm not a big fan of trading cable at the moment. Kay, you got any view on cable, or do you want to take it over and do your round robin?
I can do my little run trip, but I haven't got a view on cable. The only thing I was going to add to what you're saying is about the speed of economies and the European bloc. Amongst the major blocs, US, Europe, Japan, even Asia, China is maybe a bit different because it's still like some opacity of anything they report. But the European bloc usually or traditionally, historically, is always a slower mover than most of the other countries. So you're very right in saying that sometimes sterling could trade a bit counter trend, or on the other side accelerate problems. So yes, you're very right in pointing out that sterling sometimes does take the other way of whatever's going on in Europe, just because the case Europe is a bigger bloc, many more countries to take into account, and de facto the old continent is always a slow mover traditionally. And I'll take the screen.
Yeah, while you're doing that, just I mean, you're spot on. You know, even fiscally, you know, the UK can move much faster. The UK government can move much faster than they do in Europe. You know, I think we're still waiting for the pandemic emergency funds to be paid out in Europe some 3 years after they were announced. So yeah, that can also impact as well. Just quickly, Simon also mentions the leadership contest, which is obviously upcoming, not this weekend, but the weekend after. The vote starts, I think, on the Friday, and we get the announcement on the Monday. But obviously, good luck keeping secrets over the weekend for that one. So that will be an input for the pound in 2 weekends' time. And just quickly on Mike, do expect BOE speakers to be hawkish at Jackson Hole? I'll have to see who's there. I don't think. Have we had a schedule yet, Kay, for Jackson Hole?
No, I haven't. I really haven't seen the final schedule. The only thing I know is that up to now, Schnabel will be there from Germany, but Lagarde is not expected to be there.
Yeah, so we're just waiting on to see who is actually there before we can start making judgment on.
We need to check the schedule. I reckon tomorrow or on Thursday. So Bailey will be there. Mike is saying. Yeah, maybe. Okay. Okay, dollar yen. Here we go. Another test of the highs yesterday afternoon. Difficult piece to close above right here and now. I'm still monitoring this zone. I don't have much running in yen because, first of all, I played it rather through the yen crosses at the end of last week. And I'm a bit in between two seats here, running into Jackson Hole, seeing those CPI data. I think Kuroda can still hide behind the core CPI being below his 2% line mark, but the headlines CPIs are running above. And we haven't heard from the man at all after the CPIs coming out in Japan, which is a tad strange. We have had very little officials coming out from Japanese side lately. I trust that they are perhaps on their summer holidays as well. The diet is in recess over there, and we likely will have to wait what happens. But in the meantime, if you really feel the urge to trade, watch 36.60, 37.70-ish, and with an intermediate station here, 137.5 on a close above or below. But really, myself, I'm going to leave it alone, barring a very fast scalp when it's really obvious. As if, for instance, if the dollar yield tends and other yields would start to fail a bit and coming back off, there may be a quick correction to be played. But it's tough to go and chase it up here, and it's really tough to chase it. If anything, perhaps, since the euro is such a piece of crap, maybe have a look at the euro yen again. But even there, you know, and both currencies are behaving weak, and then we see these moves up and down, and it's all done and undone in a day's time. But we're starting to see some decent resistance now up there, and maybe this is now broken. Let me change this. And there's actually support not too far around. Well, actually, we're 50 points away, around 135.90, 136, where we stopped early this morning. Yeah, watch this bit of a triangle if you really want to trade euro yen. I'm going to move on to what I am in. I need to move this one. I want to keep first of all the daily. We've broken through yesterday. We've broken through 130.30 again, and we are now breaking below the July lows around 129.60, 65.70 on the euro CAD. If this gets confirmed over the day, I think there's a chance we make it into this 127 and a quarter, 127.70 area, especially if oils confirm their rebound and hold. This, I think, is a realistic possibility that because I'm still quite bearish on the euro, especially I mean globally, and through crosses perhaps a bit more than through the dollar right here and now ahead of Jackson Hole. But this is a real possibility. We've been trading off those this really a bit channel break, text channel break. This could be also a flag. We're breaking below, and there's a real possibility that we are going to trade lower levels. I have been playing it from the short side for quite a while, and I still haven't changed my view. And I think if we, I'm going to take you to the oil quite quickly because I wanted to add something as well on this Saudi thing and Iran oil deal and whatever deals that there may be in the making or not. It's quite funny that we've had those Saudi comments right when oil threatened to break the bit of a triangle here and the former lows below here as well. We have seen this zone being a bit of a traffic zone, and well, call me skeptic, but I don't think it's a complete coincidence that the Saudis came on when oil price threatened to go even lower, because lower than this level, we would be looking at levels around 80 or 78. Mike saying Saudis must be chartist. You can't imagine how many are actually looking at prices and they have economists who will show them similar pictures. Trust me, they are looking at more than what we think. So we're back here. There's if we break above 92.5 on WTI, there's a possibility to go back into the 95s, in my opinion, but doesn't have enough legs. I'm not really sure. But this move is supportive for this break in Euro Canada as well, in my opinion. So that's also one of the reasons why I keep this running. It's going to gradually come lower. I'm not saying that I'm going to panic around this 130, 2030 yet. With my shorts, because I am trading them around, as people in the chat room know. So it's only perhaps if we start to break back above 131 that I'm now going to have a serious look at it. But in the meantime, the being in the position that and this coming lower is actually helping my my trading account as well.
What's your downside? What's your downside levels for that?
Well, in the short term, I was showing this 127, 2075. But if you look at the longer term, and if you or the more medium term, let's say, and this renewed, even only this renewed move lower, and you would take this as a bit of a flag, we could be heading down to low 120s, right?
Yeah.
We'll have to go deeper on this one. This one in 2012. If the euro continues to suffer over the winter and commodity prices, oil is not really going much lower, why not? Really, why not?
Yeah.
On the euro Aussie, I've been in and out, playing it from the short side. I'm not in it right now because I'm trying to respect this 143.90 figure zone. It's also a bit of a target area on the trend lines. But I'm looking to sell rallies on that one if I get one. I thought we'd had there was a possibility for a little bit of a retracement here, back up to 144.80. Why not even in the mid 145s? But for the time being already, it's still looking very offered. I was short, but I took it off a bit early around here, around this 144.90 figure zone. I covered the rest. But I'm watching this. If we get a break in turn, this could have the same look as the Euro Canada, 140.5, and why not go back to 2017 levels around 136 in the end? But we have to take it one step at a time, and especially also respect if this thing would start to reverse. Okay, if we go back above 146.5, 147. And then this zone is going to be crucial, in my opinion, between 147 and 147.60, 70. It may start to put in a W and move higher again. But that will take two things: a European revival together with a commodity crash, which is it could technically happen. Because Europe is also trying to find more energy. So if energy comes off and the euro puts in a serious revival, this may be happening. But usually a commodity crash is not really great for economics as a whole. So this is a bit of a strange one to expect right now. But okay, never say never in the markets. Then moving over to I've got a little Aussie going again. People in the room know that I've bought it here the first time around on the fixing, sold them out on the little rally for as long as we are below this trend line here. I've done it again yesterday. I didn't this time take partials off as I usually do, and it's coming right back to the level. As a whole, it's not going to cost me anything on a whole because I've traded it around, as I said. But I wouldn't like it to get a close on hourlies or 4 hourlies below 68.55, and I will more than likely. And I've actually got to stop it at 48. If it goes down there, I'm out and look at something else. I don't want to get involved in too much either ahead of the Jackson Hole, because it could become a little bit random towards the end of the week. I'm going to show this one just quickly. This is the Euro Noki. There's been market talk about tax, oil, gas tax payments going on, or companies needing to buy Norwegian kroner. And it's looking a bit fragile also with Brent going back up. So the Euro Noki, for those who would like to counter trade it, is to me a bit in danger of getting a look at 967 right here in the short term. If it goes back, we need to get back above 977 and ideally above 983.85 to reverse this. Of course, also the weight of the euro is weighing on this one. But just to let you know, what we are hearing in the market is that a couple of flows are going through there. So keep an eye on this if ever this would trade a bit weaker. Last couple of is the emerging markets. Dollar makes right back onto the intermediate support. Yeah, we're still in a bigger triangle, but it's back on intermediate support here. MEX has been benefiting from a couple of things: the proximity to the States, the oil is also going back up a bit, but also we can't forget that if Biden and when Biden, because there's a bit of talks about that, about his infrastructure plans again, and if Biden wants to build and buy American, it might be the biggest size America, and Mexico being very close and being a manufacturer of American goods, Mexico could still benefit from anything positive that would come out of any of those deals. But anyway, MEX is still doing well, and I think a lot has to do with this baby, which is the Euro MEX, and we have broken through the 2020 low, and we seem to be on our way now to 2017 lows around the 1960s. I did cover a bit around those lows, and I still got a few bits and bobs running for a move lower on the Euro MEX. As long as the situation doesn't change, I'm going to sell rallies into this red line. If we get back up there into the 2030s again, 28.38, probably I will be selling it again for as long as the situation doesn't change. And then on the China, as Ryan already mentioned, we are through the prior highs. We are through this FIB 685 3/4. The news in China is not really great. I think we do have a real chance to continue into the 697.7 zone at some stage. Look for a bit of consolidation, perhaps as well into Jackson Hole. News is not priced in continuously, so we may consolidate a bit. First level of interest 683 3/4 in my opinion, and then see if the 680 holds right now. Last quick ones on gold and silver, both showing a little bit of recovery. But gold still stays already below the first resistance, 1744. We're back trading 1735. I do think we are more in a range for the time being, 28, 23 on the downside, 43, 48 on the top side, and then see what happens if any side would give way. Hats off to Dale. He called this 1871 in silver yesterday on F.A.C.E. It might be a different trend line, but anyway, he really called that level, and we bounced from it. We're already back above the first little resistance here, and now I'd like to confirm it, right? Hold here ideally. I'm a little long. I bought it yesterday in the around here 1890s. See what happens, and I'm going to watch this 1870 very closely. Below there, I might give it up, but if it starts to hold, there is a fair chance, in my opinion, we make it back up to 1940. And that's really it from me, Ryan. I'm watching the clock. We are running already into a decent time.
Yeah, no worries, mate. Well, quickly, one question I want to ask, and I'll chuck the chart up here. Bit of an education question. What do we do with pairs like this, where we're going through into areas that are uncharted? This is Euro Swiss. We're now below whatever potential low that was down there, and that was obviously the when they pulled the cap, and so we don't really know what the actual low was down there. Secondary, what I tend to do when we get things like that is I take the next most complete candle after that. That gives me a better sense of the price action, so that's why I've got that line in there. But what do you do, Kay, when you get into the techs where there aren't any, because you've got no historical stuff to rely on? You know, we haven't got any prices down here.
I can grab the screen and quickly show.
Yeah, And I know one of the tools is obviously going to be fib extensions.
Yeah.
I'm personally, I'm not big on fib extensions. I don't know why.
I know,
It's
but
not.
I
And
know
that's not to be dismissive of people who use them, of course. And I know a lot of people use them.
I know it's not, and I haven't been watching those for a very long time either, to be honest. But um, there was a bit of activity going on around this 9640, and just below. It was undeniable for a while, but you might have to watch them, right? Because
Yeah.
okay. I've got a trend line here which comes in around 94.60 right now. By the time we get there, likely lower. But if you look at, you take the fib extension from this move on the downside, broken sub 9640. There's not a lot going on before 90 really. The thing as well is that because Euro Swiss might not be the cleanest trade, because we have the S&B potentially involved there. But
Yeah.
they given us the green light to be short Euro Swiss when they started to hike rates, and Jordan saying that he said the Swiss was less overvalued than it was before, which was a very, very strange comment coming from him. And as a matter of fact, the market took it and set Euro Swiss massively lower. They haven't seemed to be intervening yet, but we will have to wait for next week or so numbers. I haven't seen this week's data, to be honest.
Yeah, I guess my point is just to highlight that sometimes it's hard to put technical analysis into play when you're when the market has moved to places it hasn't gone before.
Very hard.
You've no history to rely on, which is what a lot of tech is built on.
Yeah, but that's where tech says you have to look at fib extension, trend line targets, and the people in our room. Some people are talking about harmonics, wave counts, and those things will come into play then for possible targets where stuff can go. As I said, I'm not big on harmonics or wave counts, but Greg is, and then a few people are pretty cool on harmonics, which then may give you possible targets. I'm trying to keep it simple, really, and look at pictures like this.
So
the more you look at, the more it clouds your view, right?
Yeah. So I think that's the lesson. You know, if you don't look at things like harmonics and everything else and extensions, it's worth just keeping an eye on, because if you haven't got anything in your arsenal that can tech this type of move, it is worth looking around to see what other people are looking at. Purely because the more people are looking at a typical indicator or any particular indicator, can make it a bit self-fulfilling. Tech is really about weight of numbers and how many people are trading any indicator at any one time. But it's just something I wanted to highlight there, when you see a price moving into an area where there hasn't been historical prices there. So thank you for that.
Yeah, and just for those who are trading or want to trade the Swiss franc, so we have the S&B potentially involved in there any day, really. If they would intervene, since the base, they changed it a little bit, because they went from a higher percentage reserves in euro to an equal percentage reserves in dollars, and perhaps even slightly bigger dollar than euros right now. They have a bit of flexibility. But if Euro Swiss would go to levels that they don't like, and start to buy Euro Swiss or sit on the bid for decent amounts in Euro Swiss, their reserve diversification says that they will sell euro dollar, because they are equal parts euro and dollars in their reserve. So if we get news or wind or strong suspicions that S&B is intervening in Euro Swiss, don't buy euro dollar on the back of it, thinking that the euro is in for a bottom, because they will sell euro dollar to put their reserve schedule in place.
Cool.
And that's it for me.
Okay, thank you very much for that, K-Man. And yeah, that's been about an hour we've been running, so I'll let you boys and girls get back to your trading screens and making those pips. I hope you're doing well. And if you're not doing well, if you are struggling, then we are here to help. That's one of the reasons for this show. That's one of the reasons why we're all in the chat rooms each and every day. We're not just here to pump our trades and give analysis. We're there to offer a helping hand. If you are struggling with your trading, you don't need to struggle alone. We've heard it all before. We've heard every excuse, every problem in our long years doing this. So there will always be an answer for you. So until tomorrow, thank you very much for coming, boys and girls, and we shall see you again bright and breezy tomorrow. Cheers, Kay. Cheers, Dale. Well, I didn't see him.
Cheers, everybody.